Okay guys, welcome back to another video. This one is going to be on digital gilts. So if anyone doesn't know what digital gilts are, they're basically UK government bonds. They're basically the safest financial asset in the UK. Banks, pension funds, investors use them every day to save, trade and borrow money. Digital gilt is the same bond with the same government backing. The only difference is how it's issued and traded. Instead of running on older systems, it runs on newer digital infrastructure. So why does this matter? Well, because right now trading gilts takes 1 or 2 days to settle. During that time, money is locked up. Digital gilts aim to make that process much faster. From a market perspective, faster settlement means less risk and less wasted capital. So a question you might have is, why is the UK pushing this now? Well, the UK is trying to modernize how its financial markets work, not replace them. Digital gilts won't get rid of normal gilts, they'll sit alongside them. The timing matters because other financial centers are upgrading their systems. If London doesn't move forward, trading activity and innovation can move elsewhere. So this isn't really about chasing trends, it's about making sure the UK remains a competitive place to trade and invest. So what actually changes in markets? Well, the biggest change is speed. If a bond settles faster, there's less chance something goes wrong in between. For banks and traders, that means they don't need to hold as much spare cash just in case a trade fails. Gilts are also used as a collateral when banks borrow short term. If that collateral moves faster, borrowing becomes cheaper and smoother. In simple terms, when the system works more effectively, everyone can operate with less friction. So will digital gilts trade differently? I mean, at first, probably yes. There'll be fewer participants and lower trading volume, so prices might move a little differently. But over time, as more institutions use digital gilts, their prices should line up closely with normal gilts. For traders, this creates small opportunities, not big risky bets, but situations where similar assets briefly trace at slightly different prices. So now we're going to go into the risks and sort of the final takeaway. So the main risks are slow adoption and uncertainty around regulation or technology. But if it works, digital gilts won't change what gilts are. They'll sort of just make them easier and cheaper to use. And the big takeaway is that digital gilts aren't about speculation or crypto hype. They're essentially about improving the basic infrastructure that financial markets rely on. So when the foundations improve, the whole system benefits. So that's pretty much it for the video. It's been more of a short one, however, an interesting topic. If you guys could let me know your thoughts, then that would be greatly appreciated. Thank you for watching.